Hi everyone, welcome back to my channel. Today we are going to solve the second part of the question that we are solving before. This is 2022 October November paper 12. So we'll solve from question number 11 to 20 today. In preparation of financial statement, an accruals of rent payable was treated as a prepayment. What effect does this have on the profit and the current liability? So there is an accrual, okay, which is treated as prepayment. When there is an accrual, it should be subtracted from the rent. Which will be added to the rent, but we consider that as a prepayment, and then we subtract it from the rent instead of adding. Now, because of this, the expenses or the expense in form of rent is less, and if the expense is rent, its effect on the profit would be overstated. Now, if you look at the liability out here, accrual is our liability and prepayment is our asset. Now, it was accrual, we supposed to write down that in the accrual, but we did not. We supposed to write down that in the liability, and we did not write it down. So my liability is understated out here. So the correct option is option B. Let's move on to the next question. Question number 12. A sole trader is preparing his income statement for the year ended 31st December 2021. His first year of trading. The following information is available. So he is doing or preparing statement at 31st December 2012. This is his first year. That means there will be no opening inventory. And following information is available. So taking banked. So money that we have received from trade receivables, we deposited that into bank 16,400, and payment to trade payable is given 8,500. Expenses for the year 2,900. Balance on trade payable is 1,200, and balance of trade receivable is 700. So question is. There is one more information. He took goods for his own use 1,000 during the year. So this is the drawings. Okay. So we need to remember this one. And there was no closing inventory. So what was the profit for the year? There's no closing inventory, no opening inventory. Sales and purchase is not given, but we can find out. There is a drawings. So with this, let's find out in Excel sheet. So we need to prepare control account to find out sales and purchase. So if this is my sales ledger control account, then this is related to all trade receivable. Okay. So balance of trade receivables out here in the question it says taking bank. So whenever you receive money from trade receivable, then it should be on the credit side out here. Okay, this is your credit side, this is your debit side. Okay, so when we receive money from them, we write down here. So 16,800 that we have bank, 400. 16,400 that we have banked, deposited into a bank. And then one more information related to trade receivable is that the balance of trade receivable, which is 700. This balance is balance BD that they are talking about. Okay, so we'll prepare balance BD out here. Balance BD is after the total. Balance BD, which is 700 out here. That means balance CD would be up here. Balance CD is 700. Okay. Yeah, 700. Now we need to find out the missing figure on the debit side. That missing figure would be our sales. So 17,100 is our sales. Okay, so hope you understood this. And after sales, we need to find out the purchase. Purchase ledger control account. And in purchase ledger control account, if trade payable is decreasing, we write on the debit side. If trade payable is increasing, we write on the credit side. Question said that payment to trade payable is 8,500. So trade payable is decreasing. 8,500 payment. Okay. And then it says there is balance at the end. Okay, which is 1,200. So the balance out here is balance BD that they are talking about. So it should be after the total. After the total. So balance BD for control account would be on the credit side. Balance BD amount is 1,200, and then balance CD out here. So the total out here is 9,700. 9,700 is my purchase figure. Okay. So now we know how much is our purchase and how much is our sales. We can actually find out what question is asking, which is profit for the year. In order to find out the profit, we need sales. We need sales and we need cost of sales. Cost of sales. Cost of sales is opening inventory. Opening inventory, then plus purchase, okay. And then there is, if there is any drawings, then less drawings. Okay, that's why I asked you to remember that there will be drawings. Okay, and then we have less closing stock. Now if you remember, this is the sales that we have, 17,100. 17,100 is my sales, and the cost of sales is opening inventory. This is the first year of trading, so there will be no opening inventory. Purchases we calculated 9,700, and the drawings is 1,000. Okay, drawings is 1,000. So 1,000 is drawings. Closing inventory, question says there is no closing inventory. So my cost of sales here is 8,700. Cost of sales minus sales will give you gross profit. So gross profit in this case is 8,400 GP. And after gross profit, we need to subtract expenses. And in the question, expenses is 2,900. Expenses for the year is 2,900. Let's subtract that, 2,900, and the remaining amount is my profit for the year, which is 5,500. Which option is that? Option B. Option B is our correct answer. Let's move on to the next question. Question number 13. The following information is available for the year ended 31st December 2021. Trade payable at 1st January 18,000. Trade payable at 31st December 14,000. discount received 6,000, payment to credit supplier 158,000, return outward 3,000, and the contra to sales ledger control account is 2,000. Okay. Question is, what is the credit purchase for the year? Now in order to find out this, we need to prepare the control account again. Now this is for the credit purchase, so we need to prepare purchase ledger control account. Okay, I'll not write down all the details here. This is your debit side, this is your credit side. Maybe one more up here. Purchase ledger control account, and here we'll start writing down the amounts. Okay, amount is, in the beginning of the year it is 18,000, so purchase or the trade payables will have balance on this side. This is your balance BD 18,000. Okay, then it says there's a balance at the end of the year, okay, which is 14,000. Again, there is another balance BD after the total. So let's say total is somewhere out here. After the total, there is balance BD of 14,000. If the balance BD is out here, then the balance CD will appear above the total on the other side, okay, which is 14,000 out here. And now remaining, we just need to fill up the information. It says trade payable, discount received is 6,000. When you receive discount, your trade payable amount will decrease. Then 158,000, which we paid, 158,000. Then 3,000 is returned outward, returned to the suppliers, and 2,000 contra entry. Okay, 3,000 is written and 2,000 is also contra entry. Now if you don't know what is contra entry is, it is same person is your trade receivable as well as the payable. So the amount that we owe to him and the amount that my customer owe to me will cancel out each other. So let's find out the total on this side. It is 183,000. So the difference is my credit purchase. Okay, 180,000 minus 18,000. So 165,000. 165,000 is my purchase here. $165 is the option. Okay, yes, option C is your correct answer. Let's move on to next question, question number 14. Question number 14, it says, what is recorded in both the appropriation account and current account of partnership? In the appropriation account and the current account. So options are drawings, next one is interest on drawings, and interest on capital. So remember, it needs to be recorded both in appropriation account and drawings account. On current account. So drawings is not recorded in appropriation account. It will be recorded only in the current account. So this is not the correct option. Okay. Interest on drawings, however, will be recorded in appropriation account and current account. And interest on capital as well recorded in appropriation account and current account. So option is 2 and 3 is correct. Option C is your correct answer. Let's move on to the next question. Question number 15. RST were in partnership, sharing profit equally. So they are sharing profit equally for now. T retired as a partnership, as a partner. At this time, the balance on his account, his capital and current account totaled to 320,000. Goodwill was valued 60,000. Here partnership assets were revalued upward by 30,000. So there is an increase in the value of assets. T agreed to leave 90,000 in partnership as a loan on retirement. The balance due to him paid from the partnership bank account. So question is, how much did we pay him in his retirement? Okay, this is very simple problem. All we need to do is make ledger account for T. Okay, so if this is my T account, so T has a balance of 320,000, balance BD, in his account, combining both current account and capital account out here, 320,000. Then goodwill is valued 60,000. So once there is a goodwill, what we do is we'll give goodwill to the partners in old profit sharing ratio, and we charge goodwill on partners account in new profit sharing ratio. Because T is retiring, T will get 1/3 of 60% or 60,000 and will not be charged. So 1/3 of 60%, which is my goodwill, is 20,000. Okay, he will get goodwill of 20,000. And there's a profit on revaluation which is 30,000. So this profit will also be shared in old profit sharing ratio. So this is profit on revaluation, and it would be 10,000 for T. Okay, so 1/3 of 30,000. And then T agreed to leave 90,000 in partnership as a loan. So T would give 90,000 as a loan to partnership. So here T will give loan. Okay, 90,000. 90,000 out here. Now the remaining amount we need to pay to T from our bank account. So what is that amount? That is what we need to find out. So here let's find out the total first, auto sum, and the total is 350,000. So out of 350,000, 90,000 is given as loan to the partnership. So remaining would be paid to partners. Remaining would be paid to T, which is 260,000, and the total is 350,000. This is from the bank account. Okay. So the correct option is option D. Okay, 15, option D. However, number 16 question is removed from the question paper. I don't have the questions. If you have the question, do let me know so that I can solve it for you. Let's go to the question number 17 now. Where is the dividend received by the company shown in the financial statement? If the company is receiving a dividend, where will we show it? Okay. So when we receive dividend, basically when we invest in another company, and if that company declares dividend and pays the dividend, then we write down in our account. Okay, but where to write it down? So receiving dividend is our income, so we should write down in the income statement. Okay, and it will be recorded only in income statement. Okay, because this is the income, other source of income that we have for the business. So correct option is option A. Next question, question number 18. On 1st January, a company had 300,000 ordinary share of $1 each and 10% bank loan of 100,000. On 1st June, the company issued 6% debenture of 800,000. The profit from operation for the year ended 31st December was 120,000. The company paid a dividend of 0.50 per share during the year. What was the profit for the year ended 31st December? Okay. Now, this information out here has nothing to do with the question. Okay, because question is asking you what is the profit for the year. Okay, and they have also given us what is profit from operation. Profit from operation is 120,000, and in profit from operation, when we subtract interest and tax, then we get profit for the year. Okay, so here there is a loan that we have taken from the bank, and there is a debenture that we have taken, and it is 6%. So if we calculate the interest on this two, then we can easily find out how much is our interest, subtract that from operation profit, and then we'll get profit for the year. Okay. So 10% bank loan is 10,000. So 120,000 minus 10,000. Okay, 120,000 minus 10,000 would be here. Now, however, we need to calculate for the debenture. Now, 6% of 800,000. 6% of 800,000 is 800,000 into 6%, and that will give you 4,800. But this 4,800 is for entire year, right? This 4,800 will be divided by 2. Okay, so this is 2,400, which we will subtract. So now total profit for the year is 86,000. 86,000, option B is the correct answer. Question number 19. X Limited recorded the following information in the books of account. Issue of 10,000 ordinary share of $1 each at a price of 1.80. Payment of dividend 6,200. Transfer to general reserve 7,500. What was the effect on the total revenue reserve? Okay, revenue reserve. Now, if you know that there are two types of reserve, one is called the capital reserve and another one is the revenue reserve. Okay. Now, revenue reserve will be affected when there is a profit. Okay. So here we have issued the share at a premium of 0.10, but this is a capital reserve, so it will not affect my revenue reserve. Next one is there is a transfer of general reserve out here. Transfer to general reserve, so from retained earning to general reserve. So overall revenue reserve is the same. Okay, it was in one head under retained earning. Now it was transferred to general reserve. So overall revenue reserve remains the same. But if we make payments, of dividends, then it will be deducted from your retained earning, okay, which is 6,200. So it will affect your revenue reserve. It will affect and it will decrease my revenue reserve. Okay, so here correct option here is option A, 6,200 decreased. Okay, question number 28. H Limited used ratio analysis to analyze its financial performance. On 1st January 2021, the company prepared draft financial statement before it revalued its premises upward. How did this revaluation affect the company ratio? So we have prepared the account, we prepared the ratio, and then after that there is revaluation happened. And revaluation is upward in the premises, that means non-current assets. So how does it affect? The first of all is non-current asset turnover. The formula for non-current asset turnover is net revenue divided by total net current asset. Okay, big example of this number. Let's say my revenue is 20,000 and my non-current asset is right now is 100,000. So my ratio would be this is 2 by 10. Okay, or if I go further down, then I can say that my ratio is 0.2 to 1. Okay, now if this non-current asset changes, if this non-current asset is now 20,000 and non-current asset is upward increasing by, let's say, another 20,000, so 120,000. Now the ratio is this divided by this, and it is coming down to 0.166 is to 1. Okay, do you see that the ratio is decreasing? So we can say it is decreasing. Okay, either option A and option B. Now the next one is return on capital employed. The formula for return on capital employed is profit from operation divided by return on capital employed. So capital employed is all the amount that we have invested in the business, either from the internal source or external source. So in this case, let's say if this is my profit and this is my capital employed, and now my ratio is 0.2 is to 1. But now if that capital employed increases, then my ratio would decrease to this figure. Okay, so this is also decreasing. So the correct option is option A. I hope you liked the video. If you liked it, please do like, share and subscribe with your friends. And if you have any questions, do let me know. I'll see you in our next video. Okay, bye. Have a good day.